While most people were panicking on Netflix, I was busy building my position. I'm Jay Cole. I'm an investor, a trader, and a Bitcoin strategist, and this is WealthState. I started buying Netflix shares and option contracts in early January. Let's talk about the drop. Netflix was doing well, running well over $100 in Q4 of last year, and then right around early December, it started to slide under $100, all the way down to it had a recent low of $75. That's roughly a 25% drawdown in a matter of weeks. Why? Well, for three reasons. Warner Brothers acquisition headlines had investors worried about the massive debt that Netflix was taking on with this large acquisition. Second reason is growth stocks in general were all already under a lot of pressure due to the rates staying elevated, which we talked about a few weeks ago. And then due to those two factors, sentiment slipped fast. And we watched Netflix specifically drop from roughly $100 in early December to $75 just a few weeks ago. Nothing was fundamentally broken, expectations were. Now the key here was execution. I didn't try to catch the exact bottom. I scaled into my positions. Here's an example, take a look. My first entries were right around the mid 90s in early January. And then you'll see that I started to buy in, continued to add into my position in the 80s, as well as it's hit into the 70s, right? I was like, wow, how much lower can it go? For sure, when I saw it hit 75. When fear increases, but my thesis doesn't change, that's my opportunity to increase my exposure. Now, let's talk about the rebound. When Netflix walked away from the Warner deal, the market exhaled. A nice sigh of relief. The stock moved above $90. That's about a 15 to 20% rebound off of those recent lows. But here's the math. If you layered in properly, your return isn't just $75 to $95, a $20 increase, right? It's the blended return on your average cost. Inside the syndicate, several members saw returns north of 40 to 50%, depending on how they structured their positions. Everyone wants to buy after the rebound. Very few people are disciplined enough to buy during the 25% drop. Remember this, volatility isn't risk, emotion is. If you want to learn how to structure trades like this, stay close. Everybody wants the upside, but nobody wants the discomfort that comes before it. So instead of a 15 or 20% drawdown, you could be seeing a 30% drawdown on that same position, but in an options trade. All right, check the receipts. This is WealthState. Tap in.